Hi, welcome to the video that is the most important to pass ACCA. That is because I'm going to talk about a question that is tested most often. So you got a chance to get prepared on how to score 15 marks out of the 50 that are required to score to pass. So watch this video. Maybe not in one go, maybe break it down in halves, maybe increase the speed. But it is important for you to watch and to understand everything that is there. I hope that it's going to be valuable learning experience for you. I know that it's going to be. So every session, people keep asking me, so what are the questions that are expected the most? And the question that is expected the most is actually performance report evaluation. But because this exam is about management, performance report evaluation does not mean that you need to say that revenue has increased or revenue has decreased. No. Well, maybe in 5% of cases, when we are making benchmarking analysis in the question that requires us to make benchmarking, we will talk about increase or decrease of performance measures. But on a normal day, we need to talk about the layout of the report. Now, I'm going to rewrite the thing that you probably already know. So if you do know, just make sure that you kind of anticipate what I'm going to say next so that you double check that you understood this part of the syllabus correctly. If you do not know, well, congratulations, you will. So when we have questions about performance report evaluation, first, it is very important to actually read the question carefully. So we are going to talk about reading the question carefully. What can we be asked on? Performance report evaluation, performance dashboard evaluation, performance measures evaluation, or other aspects of reporting. Look at these questions. Look at these parts of the question. Do you understand why they are different? Just stop there for like 10 seconds and then we are going to discuss. Okay, so they are different because when we are talking about performance report evaluation, we need to talk about measures and we need to talk about other aspects of reporting. The same goes for performance dashboard evaluation. And actually, performance report evaluation and performance dashboard evaluation is the same question. Now, what does performance measures evaluation mean? So, first idea is that we need to break down mission in parts. Why? Because this exam is about strategic performance, right? Because this is strategic part of your ACCA qualification. So this means that your report is not for operational managers. It's for the board. It's for the top managers. So when we are talking about performance measures evaluation, we're talking about those measures that are going to be used by those people who got huge remuneration to just meet a couple of times throughout a year and discuss the performance. So they have to be very aggregated, and also they need to measure something that is the most important. And what is the most important for the company? Well, what is the most important for the company is its mission. So first of all, we need to say that performance measures should be aligned with the mission. So we say, to be useful, performance report, if it is a question about performance report or dashboard or measures, should be aligned with the mission. The mission statement can be named not mission, but it can be named as goals, as aims, as objectives. So you just use the word that is there. So goals, objectives, aims. So that is us understanding why we are performing this analysis. To be useful, the performance report or performance measures should be aligned with the mission. Now we need to say what are the parts of the mission. And this is going to be the only time when we get marks for using bullet points. On a normal day, it's strictly prohibited to use them because when you use bullet points, this means that you answer the question that has a verb list. However, our question is not list. Our question is evaluate, discuss, assess the appropriateness, and so on. Okay, so let's break down mission in part. So the mission can be broken down as follows. And then we need to copy paste a part of the mission and just make sure that we break it down. And let me just take a mission, like any of the mission. Let's say I opened dashboard services. It's June 26, 17 and question 1. So the mission is like that. That is a direct copy paste from the requirement. Now, what we need to do now, we need to take away this parenthesis because it is supposed to be a report. So also we need to break it down by logical parts, and we need to put bullet points and correct English a little bit. So first of all, I am going to write it as bullet point. Hey, where are my bullet points? Okay, up. Okay, here we go, bullet points. Ba-bam. Oh, why are they here? Something got wrong. Okay, once again, didn't know it would take me that much time. So to give shareholders maintainable profitable growth by developing best talent to provide world-class services with maximum efficiency. So look, maximum efficiency is a totally separate idea, totally separate objective. That can be measured by its own KPIs, and it cannot be measured by something that is used to measure something else. Provide world-class services. Again, that is totally different. Develop best talent. That is something that is different. And now a part that many students do wrong is they look at this piece of scenario to give the shareholders maintainable profitable growth, and they leave it like that because they treat it as just a single part because, well, it relates to the same word of growth. But that is not that, because in this case, you actually need to break it down in two parts. You need to talk about maintainable growth, and you need to talk about profitable growth. So why? Well, because maintainable growth is about whether the company is going to be able to repeat that growth in forthcoming periods. And profitable growth means that the company actually earns profits on the growth of the company. So these are the logical parts. Now we just need to adjust them a little bit to make them sound English. So to give the shareholders maintainable growth, to give the shareholders profitable growth, I am deleting this by, to develop the best talent, and to provide world-class services, and to provide services with maximum efficiency. Now, why are we breaking down this mission in parts? Well, actually, it is very important. I'm going to make a little detour and give you an example. Imagine that there are two persons, like, let's say, Andrew, and who's going to be Bill and Clark, and they want to open a coffee shop. And like not a coffee shop, just coffee stand at the very ground floor of the office building that they are working at. Okay, so this seems to be a very easy business, right? I mean, just a coffee stand. And however, when we are talking about this very easy business, well, actually, these three people can have different ideas in mind. Like, let's talk about Andrew. Well, see, the problem is that Andrew loves good coffee. And he's so very angry that the coffee stand that was at his office building, well, just sold the cheapest coffee possible. He wanted this coffee to be specialty coffee, to be fantastic, so that he would drink the coffee and go to heavens. So Andrew wants great coffee. Now, Bill says, well, you know what? I'm not so much of a taster, but I'm so sick and tired of waiting for my cup of coffee for 20 minutes when I have just an hour break. I want my coffee to be prepared fast. So Bill wants to avoid these lines. Bill wants to serve coffee fast. Now, Clark says, relax, guys. I just need to buy a car. And I want to buy a car by the end of the year, like January 5th, for example. Now, imagine these guys, well, in this example, open this business and they hire the manager, and the manager manages the business. Now, a manager has their own idea of what is good and what is not. And the manager says, oh, okay, so I'm managing this business. I'm going to look at net profit indicator because everybody does, or maybe at earnings before interest, tax, and depreciation, and maybe at return on capital employed. And you know what? Oh, great. I found a perfect deal. There is some rival that is going out of the business. So they're going to just sell their leftovers of coffee beans and they're going to do that cheap, but we need to buy that in bulk. So what that manager does, the manager buys this coffee and they're happy because the coffee was cheap. This means that revenue is going to be the same, coffee is going to be cheaper, so profits are going to increase. Fantastic. But what happens when Andrew realizes that? Andrew goes to this coffee spot, and Andrew is very proud of this coffee spot being open. However, when Andrew tries this coffee, oh my, it's so disgusting. It's like, like this plain coffee that they sell at some train station. No, it was not something that he wanted. Probably Andrew did not vocalize it because many businesses, especially small businesses, do not. But the problem is that the manager was trying to increase profits, increase return on capital employed, but actually the mission of this coffee spot was different. It was about great coffee. Now let's talk about Bill. He has different problem. Well, because his manager looked at how people work there, and the manager realized that, of course, there are peak times where two baristas are needed, but peak times happen only during lunch breaks that are from 12 to 3 p.m. Right, but at the rest of the day is pretty slow, so one barista can do everything. So what happens? Well, Bill arrives to this coffee spot when it's lunchtime, and he has to stand in line for half an hour. Oh my God, so his worst nightmare came true, and that is his business. This is the business where he put his soul in. That is bad. So why again that happened? Well, this happened because the manager tried to improve net profits. And obviously, if you cut personnel, your labor cost is going to decrease and it's likely that your profit is going to increase. Fantastic idea. But it contradicts the mission of the company. Now, what about Clark? Well, with Clark, the situation is like that. The manager learned that there is rival going out of the business, and they bought this huge stock of coffee just close to the year end. And profits are going to be great because just buying inventory does not affect profits. But hey, it turns out that Clark does not have money to buy a car anymore because the money was invested in working capital, in inventory, in order to have lower sales, lower cost of sales next period, and as such, greater profits. Is Clark happy? No, it's not. So you can think about that as marketing strategies, yes, as advertisement, but it's not about that, or it's not only about that. It's about what these shareholders feel is the most important. So this means that missions, goals, objectives, aims, however you call them, they are important, and we should put indicators to measure them. So let's say if Andrew would put an indicator such as a review number of likes in coffee specialty applications, like on your phone, you can log into European Coffee Tree, for example, or something like that, and there will be specialty coffees, and people will either like it or not. So maybe that would be a measure, and in this case, it would offset this. It would account for this trade-off, and it would keep the manager from making the wrong decision of buying cheap coffee. And maybe manager would work on saving cost, and maybe more manager would think about something, but not to the detriment of the quality of coffee. The same with Bill. So with the bill, if the measure was introduced to measure average waiting time during peak times, well, maybe the manager would not make the mistake, and in their pursuit of cutting cost, they would do that not by cutting personnel, but by, let's say, buying cheaper coffee. And for Clark, the same. If the measure was set as cash flow, as dividends, well, in this case, the manager would make sure that there is enough cash to pay the dividend that was required. That's why it is very important to break down mission in parts. And if you do not do that, this means that you completely misinterpreted the exam you are answering. So your exam is basically is based on the need to explain to everyone else why using net profit and return on capital employed or earnings before interest, tax, and depreciation and amortization, these very commonly used measures, are not okay. So that is why we are doing that. And for this paragraph that I have just shown to you, you're going to get 2 marks. Hey, 2 marks for that. Sounds great, right? Now, let's talk about how to align mission with a statement, with mission statement with the measures. But before we do that, let's think about what can go to other aspects of reporting. Now, other aspects of reporting are going to include the balance, how the measures are balanced. So whether we have not only financial, but also non-financial, internal and external. So absolute and relative, and so on, and also commentary or notes. So see, this is totally different. What is important that in the part where we talk about other aspects of reporting, we don't talk about the alignment between the mission and the measures. And in the part where we're supposed to talk about measures, we do not talk about the balanced, about whether the measures are balanced or not. Don't talk about how balanced is a report. Okay, But now let's talk about measures. And I'm going to start with the easier examples, like let's say the development of best talent. I'm going to put it here to, I left here to develop the next talent. Oh, yes, to develop the best talent. Okay, so we have this measure. Let me put it right here. Oh, let it be actually some header so that it stands out. And my Zoom controls mess up with my word controls. Okay, so to develop best talent, how can we measure that? And the key to that is to use two-handed accountant. So two-handed accountant says, on one hand, blah, blah, blah. On the other hand, blah, blah, blah. So the idea is that we are engaged in a very, very complicated activity. And this means that there are no easy answers. And every answer is good for some reason, and is not good for some other reason. So how can we measure that the company develops the best talent? Well, if they're the best, then probably they're better educated. So, for example, training budget. So training budget, let's say in dollars, or it can be training budget in days. Okay. Training budget, I cannot measure or not. Well, you probably say, well, but maybe the trainings are just expensive, but they do not bring any impact on the performance of employees. Yes, it can be. So we will write it as however. But before we write however, we should justify why this measure can actually show us something, can measure, can give any indication. So we need to explain the logics. We cannot just say training budget spent in dollars can be used to measure whether the best talent is developed. Because that is just a statement. We need explanation. We need to have this because, or as such, or therefore, or hence, or subsequently, consequently, and so on. So, training budget in dollars. So we can say that it can be assumed that the more is spent on training, the better the better other employees, the better is ideas generating potential of employees. As such, this training budget in dollars can be used to measure whether the best talent is developed. So see, I am showing the logics. I'm showing how it works. And yes, it is super easy, but still you need to do that. Okay, now going to however. Because this two-handed accountant allows us to get twice as many marks. And this is what we want. So, however, the mere fact that the training is important doesn't mean that, important, that the training is expensive, doesn't mean that it will bring any benefit and what the employees are actually doing. As they may be not aligned with their role. And please pay attention that in this exam, we cannot list. So we cannot say, oh, it cannot be aligned with their role or just be of poor quality or employees may not use the knowledge they got at all, after all, may not use the knowledge they received in their work. No, we cannot do that. Why? Well, it would be very naive to expect the examiner to give you marks for just saying these very easy things, right? That would be very naive. It's hard to get marks, not that easy. You are not given marks for just these 2 words, right? So by writing this excessive information, you are spending more time. And look, if you started writing the answer to a question and you spend 1 extra line talking about training budget, then you are going to spend 1 extra line talking about something else, and then something else, and then something else. So this means that by the time you finish, let's say, your question A, you will have 20 more lines. And what does it mean? Well, if you talk to people who attempted this exam, you will realize that they didn't have time to finish the last question they attempted. So what does it mean? That all the time that you spend in here writing something that is not asked means that you will not have any time to attempt the question that was actually able to bring you marks. This means that you are not going to get your 50% marks in the last question that you get, because you will just not have time to attempt it. Now, pay attention that whatever we're doing here does not relate to skepticism mark, to professional marks for skepticism that are given to you in your question A and sometimes in questions B as well. Why? Because a mark for skepticism is given when you are talking about some benefits that some action is going to bring the company, like, let's say, introduction of just-in-time or the use of value-based management. And then when you discuss how great it is going to be, you are just turning on this skeptic, this pessimist, and you say, however, it is not going to work if culture is not going to change. And you just need 1 idea, not many, because there's just 1 mark on skepticism. That is not a skepticism. That is explanation. That is evaluation. Evaluation means that you need to evaluate from 2 sides, right? So positive and negative. So that is how we were going to explain the training budget in dollars. You could have talked about training budget in days, and the ideas would be similar. What else could you have gotten? Well, you could have gotten not to develop the best talent. Your mission statement could have included something like to retain the talent, or to retain the talent. Or a mission statement could say to treat employees fairly. To treat employees fairly. Or to develop employees. And so on. Well, maybe to develop employees is the same as to develop talent. So the accents in these parts of the mission are different. So this means that the justifications are going to be different as well. Let me just collapse this. Hey, get back. Here we go. What would we write? What would we talk about if we had to retain the talent? If we had to retain the talent, well, retention means that they stay. So we could introduce something like employee turnover rate. Employee turnover rate. And if you are introducing something that is not conventional, so something that cannot be found from your financial statements in your P&L or statement of financial position, you need to say how you are going to calculate that. So, for example, number of people who left the company divided by total employees, or number of people who left the company and required replacement, divided by total employees at the start of the year or at the average at the start and the end of the year. So you can calculate this different way. And actually, when we're talking about advanced performance management, you can have different ideas that your ideas can differ from the examiners, and they can actually contradict to whatever examiner has in their model answer. But as long as they are justified, they bring you marks. If they coincide with something that the examiner is thinking, but they are not justified, it's just a statement, like in here, they do not bring you any marks. Now, what would we write? What would we talk about if the question was to treat employees fairly? Well, if the question was like that, then we would talk about remuneration probably. So average remuneration divided by total remuneration. Something like that. Okay. Now, let's try and explain what we would write if the question was if the part of the mission would state to retain the talent. So, employee turnover rate. So we need to explain the logics. What is the logics? So in here, it's pretty obvious. So we can just use the words directly because whatever we are calculating, the measure coincides with something that is stated there as the name, the part of the mission. So to measure whether this XXX company, whatever the company is able to retain the talent, employee turnover rate can be used, which is calculated as employees that left the company within the year divided by the employees at the start of the year. And once again, this is a little bit different from whatever we would do normally. So usually we take employees, this jobs that required replacement. Well, we calculated it differently. We have all the right to do that. Okay, so now we need to talk about however, because every time we need to however. So however, it might as well be that some employees don't really fit the company anymore. Well, for example, because their technology became obsolete and they don't want to retrain. And such a measure could lead to dysfunctional behavior of keeping those employees that don't bring any value. So when we are talking about, however, we can talk about this weak spots of the measure that is there, or we can talk about how it leads to dysfunctional behavior. Now, dysfunctional behavior is a very important concept in advanced performance management. That it means that dysfunctional behavior means that managers reached the target, but that led to destroying value of the company. Let me give you an example of dysfunctional behavior. So if I were a teenage girl, And I would set myself a target on weighing less. So I would put a piece of paper on my bathroom door and I would put my weight there. So what would happen is that I would not start to exercise or go for runs. Instead, I would just stop eating because that would be easier for me. Well, for me. And I really admire those teenagers who understand the complexity of the issue better. So what would happen is that maybe I would reach my target and I would reduce weight. But if I didn't eat properly, this means that I would have problems with my health otherwise. So that is bad. And nobody cares that now I weigh less. If, let's say, my skin does not look good, if my teeth do not look good, then who cares that I weigh less? The same in here. So if you set your managers the target that, let's say, 100% of employees should be retained, then that will keep someone who is clearly not a company match anymore. Now, to treat employees fairly, what's it fairly? Fairly means like everybody else. So this means that retention probably not the best measure, because the fact that the employees are retained does not really mean that they're fairly treated. It can mean that, let's say, it's just unemployment and they cannot go anywhere else. And we are using this advantage of unemployment and not paying them as much as they are supposed to receive. So a better measure would be average remuneration divided by total remuneration. So we can say that. It seems that employees are treated fairly if they receive as much as an industry average. So the measure that is calculated as average remuneration divided by total remuneration will help to assess whether the company is aiming towards this part of the mission. And now we need to talk about however. Okay, so however should challenge the assumption. And our assumption was that if our assumption was that if an employee gets as much as industry average, then they're fairly treated. But it may as well be that industry, on average, does not treat employees fairly. So, however, it might as well be that people are not treated fairly throughout the industry because businesses take advantage of employees and as such, I think that's it. However, it may as well be the businesses don't tread. Okay. So the measure won't really indicate the fairness, but rather whether the employees, but rather the relative treatment. Oh, here we go. Now, let's go next. So these are examples of how we answer. Once again, we need to structure our answer to get our marks on communication. So that's why I'm putting the name of the part of the mission that I'm answering to. And then I'm given the answer. And as I need to evaluate, I'm going to talk about good stuff and bad stuff. Now 90% of your exams are going to have performance measures that you are going to comment on. And if the requirement does not ask you to suggest any measures, then you cannot suggest them. You are banned from suggesting any measures. That is because actually, when you work in consulting services, there are three types of prices. One price, a small one, is to understand what is wrong with the company. A bigger price would be paid if a company wants to know what to change, how to change something. And much bigger price is going to be paid for implementation. Now, ACCA wants you to distinguish between these three requirements. So if they are not asking you to justify something, to introduce something, then you cannot do that. You need to understand how much you are paid so that you could ask for more payment when you actually executing the next project to introduce some improvements. So usually we're not. So what does it mean? Well, in this very case, when we talked about this training budget, retention rate, this average remuneration to industry, I said total remuneration. Sorry, industry average industry average remuneration, average company remuneration to industry average remuneration. Now it's correct. So we offered the measures here, but it may as well be that you will be given a part of the mission, let's say, to treat employees fairly, but the measure would be slightly off, like you will be given retention rate. So what do you need to do? Well, you need to acknowledge the fact that companies do not have all the information in the world. It actually takes time and money to collect that. So they give you what they give. And for example, in this case, they had the retention rate because it was pretty straightforward how to calculate that. They did not collect the information on industry average, so they could not calculate anything else. So this means that we should talk about that from that very key. So let me talk about retention rate. So we can say that on one hand, retention rate, and in this case, I do not need to explain how to calculate it because it will be something that is given to me in the report. So on one hand, retention rate can measure whether the employees are treated fairly. And I need to explain why, because this is not straightforward. Because if people don't leave the company, then they feel that because if people don't leave the company, this means they feel that they are treated fairly. And now we need to introduce however, and however should challenge the assumption. And our assumption is that they do not leave because they feel that they are valued. So we can say, however, it may as well be that they don't leave because there are not many job opportunities nearby. There are not many job opportunities for them. And XXX, the company that is in question, whatever it is, actually takes advantage of employees. So pay attention. My answer is very different. So it cannot be that you have the same measure and you learned justification and you just use this justification, because justifications are going to be different depending on how we align this measure with what we are aligning the measure. And that was the part of related to employees. Now, I'm going to talk about the next very important part, and not the one that was here. I'm going to talk about return on capital employed. Hey, how is it? I hope that it is enjoyable and very educational for you. And if you would like for me to check how you are attempting the answer, please contact me. I will send you the file with short scenarios that are going to test the most commonly questioned topics, and you are going to attempt to answer that. I am going to review that for you. I'm going to explain to you what is that you are doing wrong so that you would correct your attempt. I will teach you how to correct the way that you are approaching the question so that you pass this session. Okay, so contact me and keep watching because some more of interesting ideas are to follow. Bye-bye. So return on capital employed measure, or it can also relate to net profit. And some of the ideas will also relate to earnings before interest, tax, depreciation, and amortization. Come on, 1 second. So what about the measure? Well, the problem is that the examiner actually hates the measure. Why? Because it is not so good. Because, see, as managers, we need not to put out fires. We need to make processes that will prevent errors from happening. And with return on capital employed or net profit, we just see the result and we cannot do anything and we do not really understand what to do. So these are not very good measures. But let's talk about these measures closer. So if we have a question where we have a part of mission that says shareholders' wealth increase, then we are going to say that return on capital employed is not a very good measure of shareholders' wealth increase because it leads to dysfunctional behavior of not investing in long-term value creating activities, such as research and development, and you just need to choose one. Let me write it like that. Choose one. Research and development, marketing, or training. And if our company really needs that, then we will have to say which are especially important for, let's say, for some companies, for medical, like because it needs research to develop new drugs. Because they are treated as expenses, short term, thus reducing profits. And I told you already that on a normal day, when we are asked to evaluate measures, we do not give any suggestions because this is not something that we have been paid for. But in this very case, and just in this case, we are going to contrast that by EVA. This is exception. So EVA is a much better measure of shareholders' wealth. And why is EVA a much better measure of shareholders' wealth? As by capitalizing long-term value creating expenditures it helps not to overlook them. Or it, let's say, removes this demotivational effect. It removes the demotivational effect. That is one idea. What else is wrong with return on capital employed? Well, what is wrong is that managers are not motivated to introduce any new non-current assets. We are going to talk about that, and I'm going to show you how EVA is going to help. And let me just note that this is the only exception when we offer. The only exception is when we are given a return on capital employed or net profit, and we want to suggest EVA. Because that is how much the examiner hates this measure. And that is going to be the only exception, no more exceptions. So if you offer it something else, some improvements, you will not score any marks. Now, let's talk about non-current assets. Return on capital employed can lead to dysfunctional behavior, of not buying new property, plant, equipment, or intangible assets, depending on what the company is. So, for example, if it was some software company, we would say intangible assets. If it was some production company and they had machinery and so on, we would say PPE. So, new property, plant, equipment, because it would increase capital employed, but which would not be covered by the increase in economic benefits short term. And we say that as EVA takes capital employed at the end of the year, it removes this dysfunctional behavior of not wanting to invest in non-current assets. Another idea, if we had net profit, we would, if it was not return capital employed, but net profit, we would say that managers' performance is appraised based on net profit, they would be demotivated to invest in non-current assets, as this would increase depreciation, which may not be compensated by increased benefits short term. EVA removes this problem, as it charges economic depreciation instead of accounting. Once again, what is the idea? We do not talk about that. It is kind of implied that if you invest in non-current assets and your depreciation is charged as a 25% reduced in balance method, that happens quite often. This means that the depreciation charges in first years are going to be enormous. Another idea why depreciation charges can be enormous is that the new equipment costs more than the previous one because of the inflation, because of more technological advancements, and so on. So EVA is going to charge depreciation differently. It is going to base the depreciation charge on economic benefits that are received from the asset, so it will remove the problem. So once again, look how different the explanation is, but the problem here, this depreciation and non-current assets, it's like the second problem with the return on capital employed and net profit. And let's talk about cash. So we can say that return on capital employed or net profit are not entirely aligned with shareholders' wealth, as they are profit-based and not cash-based. And it may as well be that the company will have or will not have enough liquidity to pay dividends. Liquidity. And we would say that EVA is a much better approximation of shareholders' wealth, as by having adjustments on by having adjustments to operating profits in no part calculation. It is more aligned with cash. That is the problem of this measure is not being cash-based, because despite the fact that you say, okay, profit after tax, dividends are paid after profit after tax, it is kind of assumed that each and every company is profitable, because otherwise, why would they be created? But the problem that many companies face, despite being profitable, they do not have cash, so they cannot pay dividends, or maybe not dividends. It may as well be finance new investments. Okay, now we can be asked about return capital employed or net profit from the perspective of benchmarking. And if we have benchmarking, we would say that as return capital employed or net profit accounting measures, they are prone to accounting estimates, accounting policies, such as a depreciation policy, such as whether PPE is depreciated, is accounted for using a revaluation method, or cost less depreciation and impairment. Revaluation less depreciation and impairment method, or cost through and impairment method. Okay, so this means that the measures that benchmarking can be misleading because they are not comparable. But if a question has a part of the mission to satisfy shareholders, or the question is on Mendelow's matrix, then we are going to look at the return on capital employed or net profit as some silly toy that these shareholders want to have. So, okay, guys, if you want to have it, you can have it, but we should warn you that there are problems associated with that. So we're going to say that as shareholders use return capital employed, usually it's about return capital employed, to rank their investments. Then return capital employed is a good measure of shareholders' satisfaction. However, as it can lead to dysfunctional behavior of not investing in non-current assets. Oh, sorry, let's talk about not non-current asset, in learned value creating activities. Because it will be easier to explain, such as research and development, which is especially hurtful for because let's say it's a car manufacturer and it needs new features. New features to stay competitive. Behavior of not investing in learned and value creating activities such as research and development, which is especially hurtful for success because it's a car manufacturer, it needs new features to stay competitive. Then return on capital employed may be not maintainable in future periods. So something like that. And then we would say that EVA can be used in addition to return capital employed because by making adjustments to capitalize learned and value creating activities, it is more aligned with the sustainable shareholders' wealth. Something like that. So once again, depending on what is the mission that we are talking about, we are going to discuss that differently, and you should discuss it differently. Now, going to other examples that we have here, what would be great to look at? Well, let's say maintainable growth. What is to give shareholders maintainable growth? Maintainable means that this trick can be repeated in future. So how can we ensure that whatever company got today can be repeated in forthcoming periods? Well, another type of this question can be secured growth, secured revenue, or growth. So we can use something like this percentage of budgeted revenue contracted. And let me explain the logics. So we're starting this year on January 1st, and we are looking at the report. And we have already budgeted revenue for the next year, and we know that it's going to be 12 million. And let's say our customers usually order something 3 months ahead. So this means that if we are planning to get revenue of 12 million, then it would be great if we already had something like 3 million of revenue contracted with the customer, or at least there would be orders. The difference between order and contracts is that orders are non-binding, so the customer kind of like says that they want that, but maybe they will not actually get that, they will not agree to receive that. So if, let's say, we have budgeted for 12 million of revenue, but at the start of the year we have just one, well, maybe it will be impossible to collect that much in the end. And yes, we can talk about seasonality, so maybe the first quarter is that quarter, well, but still the logics can be like that. Another can be long-term value, long-term revenue contracted. So we can say that the percentage of long-term contract, for example, or some percentage of customers on a subscription that can be used as a maintainable revenue. Why? Well, for example, you can sell some products like, okay, what can it be? Okay, you have an online library and customers can rent books from you, or they can buy subscription. So if you have enough subscriptions, even though they're going to be paid in future, and theoretically they can be cancelled, if you have enough subscribers, well, this means that you have a maintainable growth, maintainable revenue. So okay, so number of subscribers. There can be a measure that is called monthly recurring revenue. So this is the revenue that comes from subscriptions, and we know that it's going to be perceived, that it's going to be repeated in future. Now, what else can we talk about? Shareholders' profitable growth. Well, profitable growth is going to be measured by operating profit margin, most likely, and we use operating profit margin and not net profit margin, because operating profit margin shows us business efficiency, this whatever we are engaged into, and net profit also takes into account our financing decisions. So it's not about what we do, it's about our decision on how to finance the operation. So we do not want that. Now, let me detour here a little bit, and I'm going to talk to you about operating profit margin. This operating profit margin is actually a powerful measure because it can tell us some other things. So if we have operating profit margin, then what is that we can discuss? We can say that operating profit margin can be used, let me write it in full so that you would understand. Operating profit margin can be used to indirectly measure customer satisfaction. Why? Because it is likely, because if they like the product or service, because if they pay the margin, this means they like the product, right? So our ability to sell more that it actually costs us to make the product, it comes from the desire, from how their customer values our product. Okay, what else can operating profit margin mean? How well company can measure the cost. So operating profit margin can measure how well the company keeps costs, as if costs are minimized, then margin will be higher. And for that, we will just get 1 mark. And that is great, but see, when you start thinking about measures, well, ideas kind of come into your head, and if they have already come, then it would be great to use that. And you can use that by writing however. So let's write however to the first part. Operating profit margin can be used to indirectly measure customer satisfaction, because if they pay the margin, this means they like the product. However, it may as well be that customers bought the project because they thought that high margin under such high price means that it is good, but the product, I said the project, the product will not meet their expectation, and the customers would in fact be unsatisfied or dissatisfied. Yep. Now, operating profit margin can measure how well the company keeps cost, as if costs are minimized, then margin will be higher. However, margins can increase because sales price increases, so it will not be because of cost efficiency, but rather because of the good work of sales team. So see, this operating profit margin is actually a strong measure. Now, what else do we have there? Develop best talent, world-class service. Now, I know that many of you do not like non-financial performance indicators because you come from the world where everything needs to be precise, everything needs to be very accurate, and not this non-financial performance indicators, well, they seem to be too vague. Yes, but still, they are good indicators, so we should talk about them. And the fact that they are not entirely accurate is just a part of however. So what does world-class service means? Well, when we see this word class, it's either the best, or it is either, if there is a world-class business, then it's global. Well, probably world-class service, it's just the best. And it can be measured by number of awards won. So number of awards won can be used to measure whether the services are world-class, because if the awards won, this means that the product is indeed the best in kind. Okay, now the service is indeed the best in kind. The service in this case, right? Because we had a company that was about services. Okay, what can we contrast? What is the however that we can use? However, it is unclear how many awards are there, or we can say that awards can be subjective or something like that, but it is important to actually talk about that. So, however, it is unclear how respectable those awards are, and maybe it's just some local competitions with few participants, which means the award says little about whether the service is indeed world-class. Another example and a measure that we would use could be revenue growth. So revenue growth can indirectly measure whether the services are world-class, as if revenue increases, and this means more and more customers are buying the services. And if more and more customers are buying the services are valued. As such, they are valued. However, and now we need to talk about the assumption. So the assumption was that revenue increase was because of customers buy more. But can revenue increase because not because there are more customers buying or customers buy more of these services? Yes, it can increase because of the inflation. However, revenue may just increase because of the inflation, which says nothing. Yeah, I think that's no. Like that. So see, we would talk about the relations between mission statement and measure. So after we break down this mission statement in parts, we would take the measures that are there and we would need to talk about it. So each and every measure cannot measure each and every part of the mission, and it is expected, right? So we need, out of this list of measures, we need to find those that are better suited to measure whatever is needed to be measured. Like, let's say we have revenue growth. If we have something else that is better be measured by revenue growth, we would use it then. We would not put it into world-class services because we have some other measure, like number of awards won, that is more aligned with that. And we would not choose like 2 or 3 measures for one part of the mission if the other measures are not so great. So if we had 2 measures that would fantastically measure this part of the mission, like let's say return on what we are talking about, shareholders' wealth. Well, yes, return on capital employed and EVA, they too belong here in this shareholders' wealth increase discussion. But as for the rest, do not try to just take the measure and try to put it in as many pieces of a scenario into as many mission parts as possible. So your goal is that each and every part of the mission is measured, and your goal is that each and every measure is discussed. But there can be parts of the mission that are clearly not measured. So we need to talk about that. So mission parts not measured. So you would need to say that the part of the mission related to, let's say, support entrepreneurship culture was not addressed by any of the measures. And you would get a mark for that. So that will bring you 1 mark. Now, you would not get 2 or 3 marks for saying that, okay, and this part of the mission is not measured, and this part of the mission is not measured, because you need to make use of the information that a company has. So you need to use the words indirectly and try and measure it somehow. And yes, you will have howevers to talk about the fact that it's not so perfect, it's not so good. But if there are some parts of the mission, well, that are completely off the grid, well, we need to talk about that. Now, if we have measures, that's kind of like excessive. So let's say we have net profit and operating profit. So we talked about, we had return capital employed, net profit, operating profit. So we talked about return capital employed in shareholders' wealth increase or satisfaction. We talked about operating profit in efficiency or how well the company keeps costs. Great. And now we have this net profit, and we can say that net profit does not give any new information, and it is worse than operating profit because it mixes in financing decision to the valuation of business performance, operating business performance, and it is not as great as return on capital employed because it does not take the investment that was needed to run the business. So we will say something like that. If you have the report, however, that has lots of measures, like 20, so it's clearly an overload of information. So you will just choose the measures that are needed for the mission and just say, like in one sentence, that the rest of the measures seem to be excessive. Because on a normal day, we would expect our report to have like something like 5 measures. Well, maybe 7, but not 9, not 20. 5, 7, okay. Well, not 9. And that is how we answer our first part of this 15, usually it's 15 mark question, when we need to discuss measures. Now, as for other aspects of reporting, we would need to discuss why it is great that we would need to say whether the report has this other aspects of reporting, good parts, good aspects of reporting or not, and why it is important for us to have them. So let us have a look. And we are going to start with financial and non-financial measures. I'm going to take that, put it down as a separate paragraph. And let me put it like that. Okay, so let's talk about financial and non-financial information. So depending on whether we have that or not, we would say that it is great that the report has not only financial but also non-financial information, because non-financial information is needed to understand the reasons of the financial information. So it is great that the report has not only financial but also non-financial information, because non-financial information explains the reasons of the change in financial information. Information. So, for example, number of awards won, would influence how many customers would want to buy the product, and as such would explain the change in revenue. I need to give an example to clearly state my point. So that was about financial and non-financial information. Now let's talk about internal and external. external like market share. So external information is going to be needed when the company is listed or a market leader. Not everyone needs external information. I don't really need external information. I mean, I, as Lily, do not really need external information. I just want to look into my pockets. So we will say that it is great that the report, imagine that there is no external information. So the report doesn't contain any external information. However, XXX is a listed company and it needs to ensure that it is in line with the competition to ensure share price doesn't fall. Now, another aspect would be budgeted figures. When I say budgeted figures, I mean for this year, for the year that has just passed. So the year that we are analyzing. So we would need to say that budgeted figure, it is great that the report has budgeted figures, or it is bad that the report does not have budgeted figures, that the report has budgeted figures. Because they allow to see how well the company worked compared to the targets. And as such, whether it met or exceeded its expectations. Now, planned figures. Planned figures means that it's budget for the next year. Now, with this planned figures, we are going to say that unfortunately, the report doesn't have any planned figures. However, they could be used by the users of however, they could be used to challenge the aspirations of the company. So, for example, to timely ask the question whether the growth of the company is not too conservative. That was planned figure, so budget for the next year. Another aspect would be overload with information. And it is unspoken rule. If you have something like 5 measures, fantastic, great. Well, 7 measures, okay. More, too much. As for the other part, so if there is enough measures to cover all of the parts of the mission statement, then this is okay. So you will need to say it is great that the report is kept short, because this will allow the users to focus on what is the most important. Now, that and focus on what is the most important. Now, let's talk about notes and commentary. So you could have been told in this scenario that no commentary is provided as the report is discussed. And in this at the meeting. And in this case, you need to clearly state that you have seen that. So you would need to say, despite the fact that the report is discussed, still at the meeting, still commentary would be important for those who were absent to understand the reasons of changes in results, or the reasons of the results. Another problem could be that the report, if the report or the measures has commentary that merely repeats whatever was there, has commentary that just repeats the report and doesn't give explanations. So instead of saying that revenue has increased because 3 new locations were open, it just says that revenue increased by 5%. Well, we can see that from the results of the measure. So you would need to say that. It is great that the report has commentary. However, its quality is not sufficient. It is great that the report has commentary, however, its quality is not sufficient because the commentary doesn't explain the changes, but rather repeats whatever is seen from the measures. So these are other aspects of reporting. So once again, when a question is evaluate performance report, we would start by talking about breaking down the mission. Then we would align mission with measures, and we are not going to talk about financial, non-financial, internal, external, and so on. And only after that, we would look at the report at this balance of measures, and we would need to say, well, that it is great and it has financial, non-financial, and so on. Oh, and by the way, yes, another idea that I've just remembered is absolute and relative measures. Relative means those that are shown as percentages, and absolute means that these are those that are just stated there as numbers, so as dollars. So we would say that it is great that the report has both absolute and relative figures. Absolute figures give indication of the effect on shareholders' wealth, whereas relative figures can be used to compare the results with other companies of different sizes. Let me adjust that down. And finally, what is super important to acknowledge? Who are the users? No, not shareholders. Shareholders have nothing to do with this report. They will never see that. Not public. The measure that we are using are just the board or top management of the company. Nobody else sees that this measures that we are discussing. So the fact that we are disclosing that does not mean that we are going to lose some sensitive information or something like that. So relax and never avoid it. It's just for the board. It's just for the top management. And that is how you approach this 15 marks of question A. In some rare occasions, this is not asked, but measures are going to be asked. If it is not in question A, it will be in part B, so in question 2 or 3. Another idea to remember is that now we do not have just question 1 to 3. Instead, we have a pool of questions. So for some of you, the first question would be on performance report evaluation. And let's say for some of you, the first question would be on not-for-profit organization. For some of you, question 2 would be about budgeting. And for some of you, the question would be on just-in-time manufacturing. And some of you will be tested on reaching cross-performance permit. And for question 3, someone may have quality cost, and someone will have environmental management accounting, and someone may have balanced scorecard. So you never know. And it also means that if there is a model that was tested last session, it does not mean that it will not get repeated, because now the number of questions that actually happen in the session is greater, because now it is pool of questions. But what is important is to get ready for the questions that we can get ready. And the most important part is to set your mindset correctly for this question A. So for this 15 marks that are given on performance report evaluation, and God forbid, never ever say that revenue has increased or cost of sales have decreased. And that is it. Any comments from your side? I would really love to know that, because I have vast experience in doing what I'm doing, because I have been teaching this subject from 2016, 2015, something like that. So for many years, I have seen so many students and so many mistakes that people make. And I have seen so many examiners' reports and also trainings that I was supposed to go to, because I was a member of ACCA Gold approved learning provider, ACCA Platinum approved learning provider. So I've seen this stuff, and this is the most organized piece of theory that is related to question A that you can find. So take this advice to your exam, and if there is something that is still not clear, I would be very happy to clear these gaps. So don't hesitate to ask me.